So hi everyone, it's Jordan right back again, and in this video we are going to be continuing with our series about chart patterns, and in this video we are going to be exactly looking at the cup and handle chart pattern. Okay, so the cup and handle looks exactly what you're seeing on the screen. What happens is that the price, it is normally a bullish reversal chart pattern. When the price is in a downtrend, it reaches a certain consolidation and it forms this cup format, and then after then it will break through what we call the neckline, and this is what connects up, and then it will break this neckline, then try to retest, and then it continues to reverse into the bullish momentum. Or sometimes you can say it's a downtrend, and then after forming this cup and handle or chart pattern, and when it breaks, does not retest, and then it just continues to wave high. This handle here is not supposed to come and drop to this level of support, and if it does so, it is no longer a valid cup and handle chart pattern. So this is what we are saying. If you get this cup and handle, okay, so here you form your handle, but then the handle stretches to this level of support, which where the cup is seated, and then maybe it reverses, it would not become a valid cup and handle. Maybe that could be considered something else like double bottom or anything else. So that is how the cup and handle looks like. And the cup and handle is a bullish continuation chart pattern, and it marks a consolidation period followed by a breakout. So when we get a breakout, we can get a retest sometimes, or sometimes we shall not get this retest here. Okay, so we can come after forming the handle, it will just break through, or and just break through, or it will have to first make a retest and then continue. So the handle needs to be smaller than the cup, and the handle should not drop to the lower half of the cup, and ideally it should stay in the upper third. So what you're saying is that if you get you're on a downtrend, then you get your cup, it would normally look better if this handle is not extending so down to next this support level, so that it becomes a valid cup and handle. So if the cup and handle pattern is complete successfully, the price should break above the trend line, or what we call the neckline. And this neckline right here will break through this neckline, and then the price will continue to go higher. Okay. So we can trade this pattern using the breakout strategy or the break and retest strategy. You can see that if you're having your series of downtrend, and then you form this cup and handle, okay, and maybe here the neckline is slightly slanting, and after the break you can get just a continuation without a retest, and that is what we call the breakout strategy. And then sometimes you can see that you get a retest on this handle right here. Okay, you can get a retest on the handle, and then the price continues into the bullish rally, and that is what we call the break and retest, not break and resistance, break and retest strategy. So in this chart, we are going to be able to look and spot the cup and we are going to be looking out to see the cup and handle chart pattern. So you can see that right here, the price maybe was coming from a downtrend and then it got this retracement. But we can see that right here, we have this cup format right here, and then followed by this its handle. Okay, so you can see that this one here will become our neckline. Okay, so you can see the price makes a handle, it breaks, then here it comes to retest. Okay, so you can see that right here we have our neckline. Okay, and then right here we have our handle, and then on the lower side here we have the cup. So that is the cup and handle. So you can see that here on the breakout, you can make your order from here. You can put a buy stop order from here, and then the stop loss should be at least below this handle, okay? Because we expect it could make a double retest, okay? And then here you could just put, we're using the breakout strategy, and on the breakout strategy, if this is your cup and handle chart pattern, what you're going to do is to wait for a candle that closes entirely above the neckline, this line here, okay, which connects the mouth, this one, which connects these two levels, the upper resistance. So on its break, we wait for a candle that closes entirely out of this neckline. So this candle here is one which closed out of the neckline. So you could put a buy stop order right here. And then when you put a buy stop, you put a stop loss at least below this retracement here, which made the handle. And then from there, you can see that you could be able to catch some pips up. If not so, what you could do is that after forming after this breakout, you can come and wait for a retest. If you have your cup and handle formed, and maybe here you have your neckline, so you wait for the price to come and break above that neckline, and then you wait for a retest. On this retest, you wait from here, and then you make your buy stop order. So you can see that, like right here, we have some dodges, and then we have this. It is looking like a small hammer, and it is a bullish candlestick pattern. So this is where our entry was, and this is our cup and handle right here. This is our neckline, and then here we have the neckline break, and then the retest, and then here we have a bullish confirmation candle. So we could put our buy stop order here, put our stop loss, and then target our next level of our resistance as take profit 1. Okay, so that is how we can trade the cup and handle chart pattern. 1 is for the breakout strategy, where you wait for a candle to close entirely above the neckline, and then 2 is whereby after the neckline break, you wait for a retest, and then you can be able to catch the wave up. So on this chart also, you can see that here we have a very large cup and handle chart pattern. It was I just zoomed it out so that everyone could be able to spot this large one. So you can see that here we have our neckline, why it is connecting these two points, which make the mouth 1, and then this point here. So you can see that right here the price was consolidating, and on its consolidation it made a cup. So right here you can see that the price is making this consolidation right here. So this consolidation right here, okay, and then here we have the handle, here we have the breakout. So on the breakout strategy, we would end up from this pin bar right here, because it is the candle which closed entirely above. Okay, but since now it was not triggered, we can see that here we have a retracement. Let me delete this. You can see that right here we have the handle, and then right here we had our neckline. So on the neckline break, we had a retest, and then this retest was supported by this doji. So we could put our buy stop order right here, and then I put a larger stop loss, and then we could be able to catch profit slightly above this previous level of resistance. And you can see that it was triggered successfully. So that is how we trade the cup and handle chart pattern. So in recap, the price is normally coming from a downtrend, and then after that it would make this cup, okay, and then so this neckline could be slanting or not slanting, so you have the handle. So on the neckline break 1, for breakout strategy, we wait for a candle to close entirely above the neckline, and then we put our buy stop order. So if it is not so, and then you form your cup and handle, you could wait for a breakout and then a retest, then you catch the wave up. So this is normally considered a bullish chart pattern, but still we have seen them on uptrends, and they have come to work. So the reverse can happen on an uptrend. You can see that you have the price is moving high, and then it starts to consolidate in that format, and then it forms this handle. So this would look like an inverted cup and handle, but it has not been taught anywhere. So you have to be vigilant, because the market is innovative. It means that you also have to be innovative. So you can see that the price can come and break that neckline and then retest, and then will catch the wave down, sorry. So that is also purely possible to find that you get this cup and handle within the uptrend. So it could happen something like that. Then the price tries to consolidate, and this looks like, sometimes it could even look like it is head and shoulders, but still, when you go into general sense, it is going to be a cup and handle. So you can wait for this break, then a retest, and then we could be able to catch a wave down. I know some of you experienced traders have come to realize that this has happened in the market, but it has not been ideally taught in so many places. So that is the cup and handle. So in case it happens on an uptrend, it could look like an inverted cup and handle, maybe stuff like that. So thank you so much for watching this video. Do not forget to subscribe to the channel for more videos like this and for support. My name is Jordan. Bye bye.